go ahead and we're going to build out, I would say, and by the way, I'm not going to answer any questions while I do this, guys. I'm just going to kind of do this very quickly since I'm recording. But the idea here is that we want to build an entity structure, a very tax efficient entity structure for someone who has multiple real estate or is in construction, right? So we're going to do this fairly quickly. We're going to have a revocable trust. And this is just, you know, very basic estate planning. I'm not going to get into the whole asset protection conversation. That's not really what I do. We're going to have two trustees own that revocable trust. That can be husband and wife, right? So this entity holding LLC will hold, like, think of all the big equipment. And now this LLC will then lease all of those assets to the construction company. And then the construction company obviously pays this holding company. This holding company is just owned by the same Rev Trust, right? It's the same person. It's just a different entity, just to segregate assets, right? I'm gonna get to the questions, guys. Just give me a second. You have $1 million worth of income. This is active income. This is operating income from the business. And then you have $1 million worth of losses from the rental property that you just did a cost seg from. Normally, you would not be able to take this $1 million loss because it's considered a passive loss, right? Real estate is considered passive income. So therefore, any sort of losses is considered passive losses. So passive losses cannot go against active income. They cannot offset each other. It only limits trade or business. Rental property is not trade or business. Just give you a clear example. Imagine I do this cost seg and we go to the CPA for Orenchi guy, and he's like, no, you can't do it because of EBL. And it's just an interpretation issue. And he's like, well, no, this is a trade or business. And I say, no, it's not a trade or business. It's a rental activity. Therefore, he can take the loss. And imagine being stuck with a CPA that doesn't want to do that. So I got the EA because I needed to prepare the returns for my clients as well and do it right. Because it's so easy for a CPA to say, no, I'm not doing it. Instead of saying, hey, let's look into this. Let's dig into this. Let's see how we can do it. Let's see how we can make it work. Which one's easier to do? Obviously, it's easier to just say, no, I'm not doing it. I'm not preparing the return, right?